Intel and Apple recently released their earnings reports. Both companies surpassed expectations for the fourth quarter. Intel's performance was driven by strong demand in its data center business. Apple saw growth in its services segment, which includes the App Store and Apple Music. The results come amid a challenging economic backdrop. High inflation and rising interest rates have weighed on consumer spending. The tech sector has been particularly hard hit. This makes the strong performance of Intel and Apple all the more impressive. However, both companies face challenges in the coming year. The global chip shortage continues to impact Intel's ability to meet demand. Apple is facing slowing growth in China, one of its key markets. Investors will be closely watching to see how these companies navigate these challenges. Their performance will be a key indicator of the health of the tech sector and the broader economy. Intel's fourth quarter results showed resilience. The company exceeded expectations on both revenue and earnings per share. This strong performance was driven by continued growth in its data center business. Intel is also making progress in its efforts to become a major player in the foundry market. The company is investing heavily in new manufacturing facilities. Intel aims to produce chips for other companies, including rivals like Apple. Despite the positive results, Intel's first quarter 2025 revenue forecast fell short of expectations. The company expects revenue to be between $10.5 billion and $11.5 billion. This is below the $12 billion analysts had been expecting. Intel's CEO, Pat Gelsinger, attributed the lower guidance to macroeconomic uncertainty. He remains optimistic about the company's long-term prospects. Intel expects its foundry business to generate meaningful revenue by 2027. Intel's stock initially rose in after-hours trading following the earnings release. However, the stock gave up those gains after the company's cautious revenue guidance for the first quarter of 2025. Analysts expressed concerns about the impact of the macroeconomic environment on Intel's business. They also noted that the company's foundry ambitions will require significant investment. It will likely be several years before Intel sees a return on this investment. Despite the market's reaction, some analysts remain optimistic about Intel's long-term prospects. They point to the company's strong position in the data center market and its growing foundry business. Intel's future performance will depend on its ability to navigate the current economic uncertainty. The company will also need to execute its foundry strategy effectively. Apple also reported strong earnings, with both revenue and earnings per share surpassing expectations. However, a closer look at the numbers reveals a more mixed picture. While the services segment continued its growth trajectory, iPhone sales fell short of expectations. This is a concern, as the iPhone remains Apple's flagship product. Additionally, sales in China, a crucial market for Apple, experienced a significant decline. Apple attributes the slowdown in China to the country's strict COVID-19 policies, which dampened consumer spending. The global chip shortage also played a role, limiting Apple's ability to meet demand. Despite these challenges, Apple remains optimistic about its future. The company is investing heavily in new products and services. It expects the services segment to continue its strong growth. However, the company will need to address the concerns surrounding iPhone sales in the Chinese market to maintain its growth trajectory.